Rogue Money Radio. And today's guest is Jim Willie. He is the editor of the Hat Trick Letter that you can find on goldenjackass.com. He's a repeating guest, really needs no introduction at all. Lots to talk about today. So, Jim, how are you, sir?
Hanging in there, doing fine, and raring to go.
Awesome. Well, it's great to have you on, and it's a real treat for us at Rogue and our listeners, and lots to discuss. So, let's jump right into it. Before we went on, we've talked a lot about some of the things that are occurring. I also want to, before we jump into it a little bit, Jim, could you go ahead and share, the Hat Trick Letter and where listeners can find to make sure that they subscribe to your Hat Trick Letter, please?
Sure. First of all, today's date is 24th of April. And right about now, it's the 14th anniversary of the Hat Trick Letter. It started April 2004. The death threats came 2 years later, and I came to Costa Rica 3 years later. But it's been a labor of love. It's a lot of fun. It's a lot of extreme challenges for intellectual processing. It's an exercise in examining how fraud influences legitimate systems and economic processes. Very difficult sometimes, but I integrate fraud. I notice that most economists ignore the fraud, hope for the best, and they're usually wrong. I don't work that way. I expect the fraud. I look to see how it's going to affect things, and I integrate it with the work, and I tend to get a lot more things correct than the Wall Street and government economists, and oh boy, they just don't get much of anything right. And they don't even apologize for it. All right, so www.goldenjackass.com is the website, and the monthly publication is the Gold Reset Report. I renamed it because now I think we're in the long, arduous process of doing the reset. It's going to have some climax events, and they might be rather soon. I can't define soon. It could be 2 or 3 months, could be 6 or 8 months. Very hard to know because U.S. bankers who manage the government with all their fraud and rig markets and convenient wars to obstruct the non-dollar movements, they might have a new war plan. I don't know where their next war might be, but I'm beginning to think they're running out of time and running out of resources with their war machine. But so we have a monthly report and a web page. It's called main5.html. Main 5 web page has lots of interviews like this and some public articles. I recently did a public article. Oh gosh, I can't think of exactly what the title was. Oh, I shouldn't have mentioned that. Anyway, got a recent article from just a couple weeks ago or a week ago. And these are very exciting times, CJ, but the excitement goes hand in hand with risk because we're seeing a gradual sweeping of the elite globalists. And I think the two tremendously important events that have cleared the path have been the death of David Rockefeller and the apparent death of Jacob Rothschild in that helicopter accident, which I'm coming to believe, evidence is starting to come in, that it was a suicide by a small plane pilot in order to kill the Rothschilds and their helicopter, in their helicopter. That's what it's looking like. So cut off the head, while in the meantime, for the last 2 years or more, many lower level elite globalist banker cabal players, it's a giant crime syndicate. It includes politicians, central banks, militaries, pharmaceuticals, news networks, and petroleum. It's a vast criminal syndicate. I've come to learn something interesting about Spanish. They don't use crime syndicate. They say criminal organization in Spanish because sindicato is a trade union, like, electrical workers. They're sindicato. Anyway.
Okay.
So this is a very difficult time, very risk-filled time, because the globalists are like cornered giant rats who have a lot of rat friends, and some of them the people are just not aware of. There's a rule that I live by, that if an organization does not have legal risk, is not subject to prosecution. For instance, the United Nations, various groups, the Vatican, certain NGO groups, political non-government groups, they're not subject to prosecution, therefore they get taken over by the cabal and they're used. They're used for trafficking of drugs and children. The United Nations is one of the biggest traffickers of women and children. The United Nations is never under legal prosecution or investigation. Never. Okay, so these are very dangerous times. The Red Cross is never under investigation for criminal activity, yet they spread the Ebola virus in a vaccine in West Africa. And Bill Gates actually took a bow taking credit for it. Bill Gates. Okay, these people are not subject to prosecution. These are very dangerous times. All right, let's get going with your question.
Let's do it. Absolutely. Let's jump right into it. One of your forecasts, Jim, was in regards to what Iran did, announcing that they will be reporting financially under a euro standard instead of the dollar. And then just this morning, Russia announced that they have approved Iran's entry into the EEU. Are we continuing to witness the demise of the U.S. dollar?
Oh, absolutely. There's no question about it. For the last 2 years or more, the non-dollar platforms have been flourishing. It's not that they're just created and sit there. They are flourishing. There is an estimated, get this, $8 trillion worth of projects for the Belt and Road Initiative. And one or two of the projects might involve Iran, but we're focusing on Iran at this moment. Since the sanctions came on in force with Iran back around 2014 or so, I think it was 2013 or 14. So we're talking 4 years ago. Iran has been very steady, very consistent in their barter system with China. They would pledge, say, a certain volume of crude oil. China would pledge a certain number of $1 billion worth of products in trade, like motorcycles, car parts, electronics, home electronics, stereos, radio, whatever. Okay, that has been formalized about 6 or 8 months ago between Iran and China with a formalized barter accord with an import-export fund bank, a bank account with I think something like $5 billion in it to keep it flowing. That's not for $5 billion in trade. That's for $5 billion in turnover. Once it gets turned over, they tend to repeat it. So it's a turnover fund to keep things moving. Imagine like a credit line with a big company like Walmart. Well, it just keeps the inventory flowing. It gets paid off. They do it again next month, next quarter. Okay, Iran has an import-export bank facility with China. It is huge. They do not deal with the dollar. They've been working around dollar transactions for a long time, for about 4 years. Okay. While all that's been going on, Iran signed a deal close to a year ago with Russian Rosneft, the oil company. They're one of the many pieces for what I call the Russian Rosneft oil consortium. Why would Russia buy Iranian oil? Okay, that's the contract. Russia is buying oil from the Saudis, from Venezuela, and from Iran. Why would Russia, the #1 oil producer, buy oil from Iran? It's to facilitate trade. It's to facilitate the removal of the petrodollar as the global standard. So a good slice of Iranian oil production goes to Russia. And this Russian consortium, led by their version of ExxonMobil, it's called Rosneft. They manage the viscosity mixtures. They manage the contamination level for certain grades. Many major countries have individual grades that they dictate by law for sale, and it relates to contaminant level like sulfuric sulfur content and other things. There's several different major contaminants that are managed. Okay, Rosneft does all that, and then Rosneft has this giant pool of oil, and then they sell the oil to whoever, like Western Europe or China. They sell it, or to India. They sell the oil, and it's not in the dollar. Okay, so Iran is part of a barter system with China, while they're part of an oil consortium system with Russia. So look for Iran to receive agricultural products from Russia. Little do Americans realize we're not #1 anymore in agricultural export. Russia is. We're too busy messing up our agricultural system with depletion of the soil nutrients and contamination of the water table by Halliburton, in addition to fracking by Halliburton, which is, I think, put at tremendous risk the entire water table of North America. Yeah, Iran is dumping the dollar, and they're doing a very good job of it. They're extremely successful at it with the help of their Russian and Chinese friends. They're not done there. There are projects that I believe Russia is sponsoring so that Iran can become better connected commercially with some of its important neighbors, like Turkey, Pakistan, and India, if not Afghanistan. I'm talking about port facilities, railways, and other things. I don't have all the information on it, but I do recall specifically the development of port facilities in the northern part of Iran that connect to India, Pakistan, and Turkey. Okay, so Iran's getting integrated in the Eurasian trade zone. They call it the economic union. It's just another EU. I don't like the Eurasian Economic Union, the EEU. Everything's an EU. The United States is EU. European Union is EU. Eurasian Economic Union is EEU. I don't like it. I call it Eurasian Trade Zone so as not to be confused. Iran is getting integrated. And look at the Eurasian Trade Zone as being what used to be a table with two legs, Russia and China. And you could say, well, yeah, isn't the third leg all the former Soviet republics in Eastern Europe? They don't amount to a hill of beans. Iran does. So Iran's the third leg to the Eurasian Trade Zone. And it's possible India might be, but it remains to be seen how much India can get away from the British banker grip around their throat. Right now, Modi, president of India, is really angering the Anglo-Americans, the US-UK axis. So I expect, and so does Euroraj. Euroraj comes from this corner of the world. Euroraj expects Modi to be under considerable amount of attack having to do with religious, political, and fraud and banker issues. It's going to be a never-ending stream as long as Modi wants to join the Eurasian Trade Zone. The British just will not let it go. The British, for instance, ordered Modi 2 years ago to try to monetize Indian temple gold. And Americans aren't very aware, but the Indian temple gold is something on the order of 17 to 20,000 tons of gold when you include the households. Iran is getting integrated. U.S. cannot stop it. It's all non-dollar, and they are involved in the gold trade. So,
Jim, a couple different directions you go with it, but I think more relevant is the fact that we have Macron now, who is with Trump, trying to influence him to stay in the Iran nuclear deal. I mean, obviously, since Iran's doing this, they came in the crosshairs of the United States. What's your thought? What's the play for Macron to influence Trump to stay in that? Is it Syria? What do you envision how it's going to play out?
I don't know exactly. It's very difficult, but a big piece to this is the ability of Israel to continue to influence American foreign policy. They've done it for 30 years through the Council on Foreign Relations. They are extremely powerful in their influence and in their extortion. I don't want to get into the extortion. They've got a number of different avenues that they use to control American congressmen, senators, political leaders, etc. There's a new report out. While you asked a question, I was struggling to think of who issued the report, but the report basically said that Iran has honored all aspects of the nuclear deal. To begin with, I want to make a point that every time you hear about the nuclear threat of Iran, it's basic bullshit. It's Israel writing something and the American leaders reading it. Few people realize there are 30,000 Jews living in Iran peacefully. If Iran is a threat to Israel, why don't they torture and molest the Jews in their own country? It's all bullshit. The United States doesn't like the fact that Iran was working with Russian help to create refined uranium for their own nuclear reactors for electricity generation, because some of that could be diverted for weapons-grade plutonium. So the Israelis said, well, Iran is working on a nuclear weapon. Oh, really? Well, where's the proof? There is no proof. There has been no proof. So the United States and Israel developed the Stuxnet virus to stick in to all the nuclear facilities of Iran that were not necessarily making bombs. They didn't even have missiles. How can a country without missile delivery be a nuclear threat to Israel? Now, the whole issue with Iran is that they do not want the dollar. The whole issue with Iran is that they conduct trade with China outside the dollar. The whole issue with Iran is they conduct oil trade with Russia to facilitate like liquidity on import-export outside the dollar. Iran is a victim of sanctions as a result of Israeli hypersensitivity for peaceful nuclear development inside Iran for their electricity generation. And the result is that Iran is suffering from price inflation. I mean, I'm not a big fan of Iran, but I don't like the fact that every nation that wants to conduct trade outside the dollar is basically ruined and labeled as a rogue state, subject to invasion. I mean, how's our foreign reconstruction going on in Iraq? That's 14 years along. My gosh, the Iraqi Reconstruction Fund was nothing more than a slush fund to be stolen by Kissinger and the neocons. Stolen, most of it. Majority of the funds, $5 billion, majority stolen. We don't rebuild these countries. We set up funds to steal that go into the elite hands for doing their next dirty deeds. Iran doesn't want the dollar, period. Okay, does that mean we have to destroy them? Why can't we just let them do their thing and we'll do our thing and let's see what prevails in the next 5 to 10 years. Well, unfortunately for the dollar, the Eurasian trade zone, it's going gold. They're developing channels outside the dollar. They're developing a competitor to SWIFT called CIPS. It's a cross-border interbank payment system. Some call it the Chinese interbank payment system. They got the Asian Infrastructure Investment Fund. Finally, Britain joined that, angering the Obama administration. They've got the Belt and Road Initiative with $8 trillion in projects. And I'll guarantee you this, of the $8 trillion in projects, almost nothing will be in the dollar. Okay, the East is coordinating. The East is coalescing. The East is organizing. The East is banding around Russia and China. Now they're drawing in another old empire, the Persians, and it remains to be seen if they'll be able to bring in the Indian Empire. I think the Indians are step by step going to get integrated in the Eurasian trade zone, not in large steps, in small steps. They're going to try to keep one foot in the Western British pool, and the other one is going to be working towards survival and commerce with neighbors. I'm excited by what I see. I always like seeing the development of the gold standard. And now you got something that I know this isn't quite Iran, but it's certainly their backyard. The Turks have announced through Erdogan that they want international trade to be settled in gold. They want international loans like the IMF and World Bank to be denominated in gold. And I asked Euroraj, what do you make of this? And he basically confirmed my notions, but it was London Paul who said, Jim, I agree with you. This is perhaps the formative stages of the gold trade note with the Turkish participation in this because, and then I replied, yeah, they've got experience with the Iran-India oil trade that was conducted in gold in a triangle with a little bit of, cloak and dagger stuff behind the scenes. A really funny thing happened, CJ. The Obama administration banned bank movements with the Central Bank of Iran. So the smaller, the major banks, but not the Central Bank of Iran, engaged in completing the transactions to work around the Obama sanctions, the Obama obstacles. Iranian oil was sold to India and paid to Iranian banks, but not their central bank. So how stupid are the Americans, even when they set up sanctions? What these sanctions result in, CJ, is workarounds. And when the workarounds continue, it's like a bunch of capillaries that become small blood vessels to work around a chopped off limb for the human body. After a while, after the passage of years, the blood system works around the obstacle. And that's what the sanctions are resulting in with the Eastern nations. I have a joke that before long, the United States is going to have sanctions against 2/3 of the world.
That's fairly accurate. I think we're almost there.
Well, we're thinking about sanctions against against Germany and France. We're thinking about sanctions against India. Well, why not just against the European Union? So Russia, China, Iran, European Union, and why not just have sanctions against Latin America while we're at it? Then who's left? It's the British Commonwealth. Oh, gosh. I mean, George Orwell must be laughing right now because his view of Oceania dominating the Eurasia giant continent, it's just not working out. All right, let's move on.
Yeah, let's shift gears just a little bit and talk about OPEC and oil. We're watching the administration, OPEC go back and forth. Yesterday, the Saudis shared that 19 of their oil tankers are held hostage off the Yemeni coast. A lot of speculation that the Saudis are attempting to try to drive oil up into that $100 price mark. The last few months, we've seen it greatly increased past $70 a barrel. What are your thoughts, Jim?
Oh, it's a huge question. I have a lot of thoughts. To begin with, OPEC is pretty much dead. They come up with agreements now and again. Like right now, they've got an agreement to limit oil output, and that would be an important ingredient for driving up the oil price. There are rumors that, well, not rumors, there are widespread reports that many nations in OPEC, and they tend to be the non-Arab ones, the African nations like Angola, Nigeria, Venezuela. They're all OPEC nations. They're not complying. Okay, so the OPEC agreement to limit output appears to be an Arab agreement to limit output, and it seems to be centered upon the Saudis. The Saudis have cut a deal, as I mentioned before, with Rosneft of Russia. The Saudis are selling oil to the #1 oil producer. Go figure that out. I told you, it's three purposes: manage the contaminants, manage the viscosity, and manage the non-dollar payment structure. Okay, so the Saudis have a new agreement with Russia. Russia is a co-signer of the OPEC agreement on limiting output. Now there are rumors that Russia is not honoring the agreement because their commitments to China are so enormous in supplying oil. Okay, so Russia oversees an OPEC, basically an Arab deal to limit output, and it's not even working with a Russian coordination. Okay, if you're looking for the big factors behind the rise of the oil price above 60, I believe it's still above 60. I can check while we're talking. There are a couple of important factors, and they are not the OPEC agreement. Okay, the price right now, 68.6, close of yesterday. Okay, I see that in April, it has moved from 62 or so to 68. It moved down at the end of January from 65 down to 50, 57.5, 58. Okay, so in the last couple of months, it's been working above 60 toward 70, and this is a 3-year high. Okay, what is the big factor there? I'll tell you what it is. It's the Fed. It's not OPEC. It's not supply limitation, not output restrictions. It's the Fed. It's Wall Street banks. They're buying oil contracts and talking about it. It's not a big secret. The Fed has been buying stocks, the S&P stock index. The Fed has been buying crude oil contracts. Well, why would they want that? Isn't that a higher price for the U.S. economy? Well, since when do Wall Street banks give a hot shit about the U.S. economy? Wall Street banks care about their credit portfolios loaded with shale oil investments that are all in trouble if the oil price is 50 or lower. We're talking about multi-billion-dollar losses for Wall Street unless the oil price gets above 60 and works towards 70. So the Fed with Wall Street collusion are buying oil contracts. And the Saudis are saying, well, good work. We'll send you a crate of grapes and figs. And the United States says, okay, we'll send you some weapons. Okay, so that's how the buddy system works with Saudi. This is not about oil output restrictions. There's a big player in this shown its big muscle in the last couple of months, and that's Iran and their oil supply. There were stories a year ago, a year and a half and 2 years ago, 16 and 17, 2016 and 17, that Iran had 80 oil tankers floating off their coast because they refused to stop production. And they had trouble selling it into the market because they were restricted on payments with dollar and SWIFT and all that. Okay, Russia bought some of that. But if that was 2 years ago, my guess is much of that has entered the market. The big talk a year ago was that after the nuclear treaty with Iran, they were going to sell a lot of their tankers into the tanker supply into the oil market, and you were going to see continued pressure at the $50 level. Well, you know, I got news for you. The paper market system dominates. And Wall Street, with their Fed master, have been buying oil contracts. So even if supply was a sudden surge 12 to 18 months ago by Iran, that effect might have been absorbed. You got a lot of talk about how the shale output from North America influences the price. I think, once again, that's kind of like restricting OPEC oil output. It's not all that important when compared to the crude oil futures contracts from the Fed and the Wall Street banks. Every time you hear about the crude oil market and, you know, some of the internal pressures for the buying, you hear about, well, you got, you know, considerable amount of Wall Street bank purchases in the futures market. Okay, so this is very big. To me, there are two giant stories in the oil world, and they both connect Saudi and the Chinese. I don't want to get into a long discussion of Aramco. I had a nice two-page coverage with a lot of linked articles and a lot of different side stories in the April Hat Trick Letter report that people can subscribe to. But the Russians and the Chinese, not just the Chinese, are looking to buy a stake of Aramco. I don't want to get into a long discussion about Aramco, but they're claiming it's a $2 trillion company, petrochemical, oil production, oil reserves, the whole kit and caboodle. Okay, I think they're lying, and a number of other petroleum analysts think they are lying about their oil reserves. It doesn't seem ever to move off the 260 billion barrel figure even after 20 years. I think they've got 70% less than that. At least 50% less than that. They always talk about, well, you know, replacement discoveries. Yeah, they're all very small. The Ghawar giant oil field is producing 98 to 99% water, called the water cut. They drill out for a few years, they're replaced with water to keep pressure down below up. Otherwise, they can't pump the remaining oil out. They're producing water at Ghawar. The second biggest is also producing a good deal of water. They got a number of small oil fields, but some of them are being captured near the Yemen border, where I got confirmation from a fellow with an Arab name who claims to be a petroleum engineer that my suspicion is correct. They're doing lateral drilling at the Yemen border inside Saudi Arabia to tap into the Yemeni oil deposits. This is part of what the war is about. Okay, so the point is, Aramco is a fraudulent investment for its IPO. That's why New York and London won't touch it. They don't want the lawsuits because of, the discovery phase, the transparency is not there. The lawsuits will come if investors learn later, wait a minute, you never had 260 billion barrels of oil reserves. You only had about 80. I want my investment back, and I want to sue you. Okay, the brokerage houses cannot get past the discovery side. Aramco is probably withholding some of their data on the discovery side. So I expect the Aramco deal to be a private deal, not an IPO, where they announce a dollar amount, not a percentage amount. Because if for instance, the Chinese buy $100 billion worth and say that it's a 5% stake, I'm going to be saying, well, it's $100 billion, but it's a 25% stake. If the Russians do the same, then the Russians and the Chinese will own 50%. If they own a little bit more than what I just posted, 100 billion and 100 billion, it's possible that the Russians and Chinese might own a majority 55% interest in Aramco, and the Arabs will lose control. The Saudis will lose control. That's what I think might happen. All right, with all this pressure for an investment stake to help fund the Saudi 2030 vision to diversify their economy into technology and a lot of other things, telecommunications, whatever, the Chinese are winning the leverage for having Saudi oil sales to China done in RMB terms. This, I believe, is a dagger in the heart of the petrodollar. Okay. The second big event is the Shanghai. It's starting now to be called the gold oil RMB contracts. Not contract, because they're two. One is oil and gold, and the other is oil for RMB. So they're called collectively, I call it the triangle. They're called now the GOR, the gold oil RMB contracts, plural. Okay, this is very important. I regard it as the most significant financial structural event in a generation. It's in Shanghai, and I believe the Chinese will say that the Arabs, in particular the Saudis, who are losing their Chinese market share, by the way, the Arabs in general are, I think the Chinese are going to tell the Arabs, in particular Saudi, we want to structure some of our oil purchases in this GOR contract, the oil RMB in particular, the futures contract. It's called the Petro Yuan contract by some. In fact, it's called that by a lot of different analysts. I think it's going to flourish. I think that not just the Saudis will use it. I think the other Gulf Arabs like Kuwait, Oman, Bahrain, I think they will use it. And for people who aren't aware, Qatar already sells oil and natural gas to China in RMB. Not new, already. It's been going on for months, not in the U.S. press. I regard the Shanghai Petro Yuan, the oil RMB contract, as the death knell for the petrodollar. Because it means the dollar no longer has oil supremacy and monopoly for the sales. Oil sales no longer have a monopoly in the dollar. It's not there anymore. Okay, therefore, I see a lot of momentum coming for the Chinese RMB in the oil market. You're going to see the Arabs sell more in RMB, and you're going to see the Asians buy more in RMB, and this volume will rise. The launch a month ago for the oil RMB contract was a good deal more successful than some original expectations, which pushed off the table a lot of doubts. Glencore and a couple of other major players in the West were participants. Some naive observers say, well, the Westerners are just getting their mitts in there to control it. No, they're not going to be able to control it. It's too diverse, and it's too well organized and arranged by the Chinese in Shanghai. Okay, so you have the death knell of the oil RMB contract, and you have the dagger in the Saudi RMB oil sales. This will change a lot of things. Keep in mind, at the same time, the Russians and Chinese have their holy grail, and a couple of the important pipelines for oil delivery to China from Siberia are already done, and the oil is flowing from Russia to China. It's all outside the dollar. Not only is it outside the dollar for the actual sales, but the pipeline construction, CJ, has been largely financed by treasury bonds held by China in their forex reserves. This is a major dumping transition into the Eurasian trade zone with an oil foundation non-dollar.
Wow, very interesting. So recently also the Shanghai Gold Exchange expanded new negotiations with Russia, and I take at some point, is there any thoughts, Jim, as to backing the yuan with gold?
I think that's the last step. A lot of people look for it to be the first step. I look for it to be the third of 3 steps. The first step toward a gold backing for the Eurasian trade zone generally, not currency, but generally for a trade zone, will be the gold trade note. It will supplant the Treasury bill for, say, oil payment. Now, just look at Saudi versus China. They might use the oil RMB contract. Okay, that will be for price setting. But what will the payment be? Okay, first you set the price, and then you have 2 hands passing something for payment. I think it's going to be the gold trade note to fulfill contracts with price set by the oil RMB contract, the Petro Yuan futures contract of Shanghai. Okay, so first I expect gold to enter the room in trade payment. I just explained how that might work. This gold trade note would involve a margin put forth, like say 5 or 10%, just, roughly, of cash, but of gold cash. Gold currency. Few people regard in the West gold as being currency. Gold is a currency. It's the ultimate currency. It's a supreme currency. It's the first original currency. Well, if you exclude, beaver pelts and salt piles. First will be the gold trade note in payment. Now, once you get a good deal, you got to think in terms of evolution, CJ. You don't just bang, put on a gold contract, a gold backing for a currency.
Right.
You got to think of evolution. The evolution will be the gold trade note is used in a lot of trade payments. And when there's a considerable amount of volume, the gold trade notes will be used to fulfill gold purchases, which will be used in the banking system that push out the Treasury bond. So the gold trade note will be a device for moving out U.S. Treasuries from global banking and their reserves and replace and supplant them with gold bullion. Once that process is well along and banks have a good deal of gold in their reserves, their reserve assets, and they're demarcated and in published data and all that, then you will see the gold currencies, and I think it's going to be the ruble and the Chinese yuan. And you might also see Iran alleviate some of their currency problems. Oh gosh, if any country in the East needs a gold-backed currency to stop the run on their currency and the attacks from foreign sides, it's Iran. But I don't think they're going to jump to a gold-based real. I think they're going to move quickly into non-dollar commerce, barter, get things moving, get away from dollar settlement, get away from import-export dollar contracts. So their currency will be primarily valued versus the Russian ruble and the Chinese yuan, and not so much against the dollar. So the Americans could say, well, we got another 50% decline of the Iranian real currency. Ha, 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 job well done. The Iranians could say, yeah, but we don't have any commerce with you. The big key for Iran is commerce and payments with Europe. And we're starting to see a breakdown that's very interesting geopolitically. That term is thrown out around a lot. It just means politically, but on a large scale. Geopolitically, the Europeans are saying, wait a minute, we worked out a deal with Iran, the Iran nuclear deal. The Iranians are honoring it, so why shouldn't we? So let's accept greater commerce with Iran. Let's accept some oil and gas sales. Let's pay for them in euros and move along. And if the United States wants to obstruct it, well, let them have their attempts. But the United States attempts to obstruct the German Nord Stream 2 gas pipeline with Russia has backfired. Now the Europeans can say the Americans didn't get their way with the Germans. Let's follow the German path and let's have commerce with Iran. There are big exploration and production contracts that European major oil firms don't wish to lose. They're fighting for a stake in the Iraq oil business, and now they're fighting to get a piece of the Iran oil business. And the player in the room who's just throwing stink bombs everywhere and cutting cords is the United States. So the risk is that vis-a-vis Iran, the United States might be labeled a rogue state. This is getting very weird, CJ.
Mm-hmm. Well, a lot of it, again, these actions are due to the lack of faith, the lack of trust, in the dollar, Jim. How difficult does it become for the United States to back the dollar with any type of gold reserve?
First of all, you need the gold. Second of all, you need to stop the hemorrhage from trade. These are back-to-back, two sides of the same extraordinary problem. The United States doesn't have any gold in Fort Knox unless you count the gold plating on tungsten bars. The United States has 8,000 tons of gold has 8,000 tons of metal bars sitting in Fort Knox. If there were a thorough assay analysis done of the bars, they would be found to contain, I'm guessing, 97.5% tungsten and 2.5% gold plating. They swapped them out. It was done during the Clinton administration. It was done under the auspices of Ron Brown, who was murdered, the Commerce Secretary. This is ugly. Donald Trump entered office with a plan by I think her name was Judy Shelton. If that's not correct, it's a very close name to Judy Shelton. She had a gold standard position for the United States for part of its recovery. Trump did some analysis and got shocked to learn that we don't have any gold in Fort Knox and we don't have any gold in West Point, and we're up against the wall because we need to join the global currency reset with gold-backed currencies, and we don't have any. It was stolen by Bush, Clinton, Rubin. I don't want to get into all the different places where it might have been used. Don't worry about that. They combined a lot of narcotics profits with a lot of stolen gold and had a few very major projects. Let's not get into that. The point is that the United States does not have gold reserves, and neither does Canada. But Canada could replace its gold reserves quickly. It would be expensive. They'd have to finance it somehow. I don't know how that would happen. Maybe the Chinese could assist with that. But the Chinese are not going to assist the United States in replenishing their gold supply. The second big issue of extraordinary importance when installing a gold standard is the hemorrhage, the trade deficit. I've been mentioning this in frequent shows, but you've got to put into perspective what the $550 to $600 billion annual trade deficit really consists of. Think of it in two terms, in terms of gold and in terms of oil. Those are two of the main bases for money in global finance. If the United States had $550 billion worth of trade deficit and had a gold-backed currency, we would forfeit approximately 13,000 tons of gold in the first year. Now, I keep repeating this, and it does not show up anywhere in financial press. United States cannot go to the gold standard unless we're prepared to lose 13,000 tons of gold minimum in the first year. So who's going to pony up the gold only to see it forfeited to the countries that we import from? Okay, that's the gold terms. Other naive observers say, well, Jim, you don't understand. We have the Strategic Oil Petroleum Reserve. And I say, well, you don't understand. It's only worth $7 billion. So you need 80 strategic petroleum reserves to cover the $550 billion in trade deficit in the first year. Okay, divide 360 by 80, and you get about, I'm not sure, 4 or 5 days. Okay, so in 5 days of a trade deficit, you lose your entire national strategic petroleum reserves. We're not ready for a gold standard. So what's the solution? Well, it's something that Donald Trump talked about during his presidential campaign, but he abandoned once he learned that we can't do a gold standard. And he got influenced by the military hawks. He got influenced by the Wall Street bond fraud kings. And he stopped his conversation and plan an initiative to reindustrialize the United States and to embark on $1 trillion infrastructure program for the United States. Here's what the United States need to do. It's like a 5-year plan. If I were the finance minister, we call it the Treasury Secretary. If I were the economic advisor head for the White House, I would say we need a 5-year plan, $1 trillion investment for our infrastructure, highways, railroads. We don't have one high-speed railroad to connect major cities in the United States. Not one. I mean, we're working on the San Francisco to LA, but, China interfered with that because most of the components were to be from China. We don't even know how to make them.
Mm-hmm. Right.
We need the railroads. We need the highways. We need the port facilities. We need to upgrade a lot of different things, tunnel facility, bridges. We've been spending, as Jack Ma of Alibaba said, we spent $25 trillion in the last generation, like 30 years, on military. What did we get for it? I'll tell you what we got for it. A lot of wrecked countries and a lot of U.S. enemies. We need to embark on this $1 trillion infrastructure program and have a plan to create like 10,000 new businesses a year with an emphasis to export. And the sad fact of life for the United States economy coming up during this reset is that we're going to have to export more. And whatever we export will obviously be what we produce. And that will result in shortages. So we produce a lot of food. Okay, fine. We'll export a third of it. We'll have food shortages. What else do we produce? We don't produce much. We outsourced for 30 years. How did that work out? We're now in debt, lacking industry, and the talk is of a gold-backed currency global-wide, internationally, and we're not ready for it. Our elites stole our gold. Nobody will lend us gold because we have a huge trade deficit. We can't get going on an infrastructure program because we're locked into constant war. Trump increased by $300 billion or $180 billion, I don't know exactly, the military budget. I don't call it defense budget because it's aggressive. We're not even starting in the infrastructure program. We haven't even begun laying the foundation for a gold-backed currency, and we don't even have gold. So it's all moronic talk. I'm looking forward to the first speech and the first signed contract for the infrastructure program. Japan was being courted by Trump to get involved with, say, $500 billion for infrastructure projects. And they finally said, we don't want to. We don't trust you. I think if there's a global $500 billion project for infrastructure programs, Wall Street will steal 10% of it.
Exactly.
So is it possible to install a gold-backed dollar? Here's what I think is going to happen. We're going to participate in this international movement toward gold-backed currencies. We're going to participate with our usual fraud. We're going to say we got a gold backing and we've got an independent auditor, but we're going to defraud the audit process. There'll be a lot of rumors that the United States really doesn't have that 8,000 or 10,000 tons of gold behind their new dollar. And you're going to start to see an attack on the new dollar. I call it the Scheist dollar. It's Scheist dollar because that's German for shit. And I call it the Scheist dollar because it's not going to have a legitimate gold backing. And it's going to have third world fundamentals behind it, namely $1 trillion federal deficit and a $500 billion trade deficit every single year. That is a formula for a 30% devaluation every single year. We're going to lie about a gold backing. We're going to cheat on the auditing. We're going to prevent international audits, and we're going to be subject to international attack and isolation that could be in the form of nations saying, we will not export to you, the United States, because we don't want your old dollar and we don't want your new dollar. Woo! That's what I think's coming. I don't have a timetable on this. I just have an expectation on sequence of events. Very much like General Norman Schwarzkopf said back in '91, we have an event schedule here. This sequence of events must take place, and it will be in this sequence. And the reporters are saying, but when do you think that's going to happen? And he said, I don't know. When do you think step one will be completed? Put it on them. I don't know. When do you think step one will be? What is step one? Step one for me is oil trade outside the dollar. If we've had the dollar's de facto standard since '74 set up with oil purchases and then petro surpluses recycled in treasury dollars, then we've got a de facto oil standard for the dollar. The first step in removing the dollar as a supreme currency in view of a reset, in view of a paradigm shift, in view of a revision to change the current system, the first step is oil sales outside the dollar, which will lead immediately to reserves set up outside the dollar, which means treasury dumping in favor of gold bullion in bank reserves. Those are the first steps. When are we going to see the first step of oil sales not in the dollar? Precisely between the Saudis and the Chinese.
Jim, I want to get your also just in closing your thoughts on the imminent subprime bond collapse. Obviously, we've learned nothing from it. What are your thoughts on that?
Well, we had the Lehman event, and I'd like to give a quick preliminary on the Lehman event. There were two sides that are very poorly mentioned in our, new historical revisionist annals. In other words, our propaganda self-serving historical reports. The first is that in 2005, the Chinese were informed that the United States was going to renege on a, let's just call it a 4,000 or 5,000 ton gold lease that was set up in 1999 and 2000 as part of the Hong Kong independence treaty. The United States had a treaty, and part of it with China was the United States would invest a lot of new industries in China, and in return, China would lease us gold. In 2005, we reneged on it, so China said, they made a public statement, we're going to focus our foreign reserves that are dollar-based in treasuries. Interpret that as China will now begin dumping Fannie Mae bonds. They held $100 to $200 billion worth of Fannie Mae bonds, and in 2005 they began to sell it. Does anybody believe that the selling of Fannie Mae bonds by China in 2005 and 2006 might have contributed to the Lehman and subprime bond problem in mortgages? Hell yes, not told in the U.S. press. They don't tell about it in the U.S. press because they don't want you to know about how we leased gold from China. They don't want you to know that we sold their gold into the market, and they don't want you to know that the Chinese sold Fannie Mae bonds. Okay. The other piece of Lehman Brothers. This is the second untold story. We never fixed anything. But before fixing anything, we had this explosion of Lehman Brothers. It was described as a Lehman Brother failure. Why did they fail? It's like saying, George over in the corner just died. Okay, what was the cause of death? Well, in Lehman's case, it was financial suffocation. J.P. Morgan and Goldman Sachs bought a few $1 billion worth of Lehman mortgage bonds and never paid for them. So they put a bag over Lehman Brothers' face and head, suffocated them to death, called it a failure, called it a death, and then Goldman Sachs received 100 cents on the dollar for all the credit default swaps related to their mortgage bonds and the Lehman position. It's a crime scene. Okay, after the killing of Lehman and the failure to return Chinese gold, the United States decided, let's set up a $700 billion TARP fund. And it was largely stolen by Wall Street. It was not used for credit purposes as Congress had specified. It was used instead by the Wall Street banks to buy, what do they call them, preferred stock. And, what was this? Henry Paulson of Goldman Sachs came out and declared, well, you can't improve and guarantee the lending process if the banking system is insolvent, so we made sure the banking system would remain functional. Yeah, it remained functional for derivative trading and bond carry trade, but not for lending. Okay. We then proceeded, after the theft of the $700 billion by the Wall Street Bank, we proceeded to liberalize with the Dodd-Frank regulatory bill. We let the Wall Street banks write their own regulatory bill. Okay. And naive will think, well, no, the Congressional Finance Committees wrote that. Well, yeah, who handed it to them? Citigroup. Oh, gosh, this is so convoluted and incestuous. Okay, we then proceeded to encourage widespread bond purchases, not just for mortgages, namely the Federal Reserve doing QE, quantitative easing, what I call African style, South American style, hyper monetary inflation, buying up and monetizing the U.S. government debt, not sterilizing it, which means they didn't remove money from the banking system while they injected huge sums to cover the new U.S. government debt. Unsterilized hypermonetary inflation was the result of Lehman and that whole event, whole episode. We didn't fix anything. We expanded the abuse to cover sovereign bonds, and the European Central Bank did the same. Fast forward a few years, the European Central Bank decided we're going to cover corporate bonds also. So what began as covering subprime bonds in the United States expanded to cover U.S. Treasuries, Euro bonds, and European corporate bonds. And then the Fed last year let it be known, not with formal announcement, they're going to cover the stock market and the crude oil market. So we've expanded from subprime bonds to mortgages, sovereign bonds, corporate bonds, and the stock market and crude oil. All these markets are now subprime. So what comes is what I call a systemic Lehman event. What comes is a similar event in parallel with what happened in '08, where they killed Lehman, I think this time they're going to kill a national banking system. And my best guess is going to be Italian banking system, because they're the most insolent, rebellious, feisty, and difficult. They're talking about in Italy of a new type of currency. I think it's kind of like a caretaker currency for a new Italian lira. It's called a sovereign currency. It's going to be useful and accepted for bank rescues. Very clever device. It's kind of in between a banker credit note and a new currency, and could later become a currency with certain devaluation features. Okay, I think Italy is going to be killed for its banking system. And if you hearken back to '98 with the long-term capital management fund with Scholes and Merriweather, you'll see that the Bank of Italy was the victim. They lost a good portion of their gold reserves. And when you look at official IMF gold reserves nation by nation, and you see Italy with 3,000 tons, be sure to giggle, because they lost most of it under the guidance of long-term capital management, which was given the Bank of Italy, the Central Bank of Italy. LTCM was given the Central Bank of Italy its gold for use as collateral, and LTCM went bust. If anyone thinks that Italy still kept their gold during that, you fail Finance 101. Okay, so a systemic Lehman moment is coming. A systemic Lehman event. It's going to be widespread. These banks spread the derivative risk. It's not just Morgan Stanley anymore. Morgan Stanley added $8 trillion in '09 and 10 for their interest rate derivatives, and that was responsible for the big bond rally that the Fed and the U.S. government called a big flight to safety. It was all a lie. It was a huge input of interest rate swap derivatives and just basic bank derivatives to support the treasury bond market. Okay, so this systemic Lehman event is going to involve the fracture and default of some sovereign bonds, some government debt, formal sovereign bond. I'm thinking Italy just for starters. It could attack the United States because we're in the worst shape of all. Not necessarily with on a ratio of debt to GDP, but we're climbing. We went over 100% recently, and it's probably closer to 105, 110% right now. There's going to be entire banking systems that fail. There are going to be sovereign bonds for individual countries that enter default. There are going to be lots and lots of problems with import-export as a result. This is what comes with the global systemic Lehman event, because they lashed together not just the banking systems, but the big formal financial structures and the large banks that are involved in derivatives, the British, European, Western European, and the United States, a couple in Canada like CIBC. They're all tied together. And the thinking was, well, if we're all tied together, we can never fail. No, we're all tied together, so they all fail together. And that's the risk. They all fail together. And you got to look for not for a combined global banking system failure, but for symptoms related to that make it quite clear that it's a next event down the road. And I think it's a failure of smaller sovereign bonds and smaller banking systems, and Italy is top on my list. We got so much financial crisis dead ahead that it looks to me like a solution is coming, CJ, where the central bank system, the franchise system, is going to start coordinating with maybe Basel helping it along in the strategic planning to increase their gold holdings so that when the sovereign bonds are devalued or written down in some fashion, not written down 100%, but written down with losses. The central banks which are holding, I mean, just the U.S. Fed and the Euro Central Bank combined, they're holding something like $7 trillion or $6 trillion of toxic sovereign bonds. They're going to want to offset that with gigantic gold profits. So I think the central bank system under Basel tutelage is going to order the central banks to load up on gold and let gold go up tenfold so the central banks don't go into default.
Wow.
With this systemic Lehman event coming, the elite do not want to see central bank defaults. And I think the way they do that is to buy up gold and let it go up tenfold. If you think there's no precedent, you're wrong.
Jim, closing thoughts.
By you or by me? You didn't give me a chance to take a water break.
Oh, I'm sorry. grab your water and then go ahead.
Final thoughts. The pressure points. The pressure points are U.S. government finance. It includes the German, U.S., Russian relations. It involves Saudi and China. It involves Iran with the Eurasian trade zone. These are the pressure points. U.S. government, Germany, Saudi, and Iran. These are the major pressure points for global paradigm shift. In other words, major change leading toward a real global reset. I think it's coming. I think it's in progress. I don't think it's, something to expect down the road. I think it's already begun. And there are lots and lots of hints, and I discuss some of these events that are evident toward the global shift in the Hat Trick Letter. It's found on www.goldenjackass.com. It's been a labor of love, CJ. I got to admit that at times it's exhausting and a little dispiriting. I expect. Oh, here's another pressure point. Gold. Multiple prices being quoted. It's already starting. We're going to start seeing an encouraging new trend of more than one gold price being quoted. We already have a slight disparity with Shanghai gold versus COMEX gold. Little known is that there's a disparity that's not small between Shanghai silver and COMEX silver that has been over 5% for a sequence of months. A recent quote I was given was about 8.5% premium on Shanghai silver versus COMEX silver. So when I talk about precious metals and gold showing multiple price points around the globe, we might want to start with silver because it's already happening. There's a monthly report with goldenjackass.com. It's called the Gold Reset Report. I invite people to come on the Golden Jackass site and bounce around, look at some of the free material, and sign up for the Hat Trick Letter. These are truly exciting times. These are historical times. I'm hoping that in the coming years, I can take select reports from the Hat Trick Letter and publish them as a document, as a book. I'm not talking about a 300-page book. I'm talking about like a 150, 200-page book on the catastrophe that befell planet Earth from the phase-out of the King Dollar and its reign of financial terror. Very exciting times, CJ. I don't know how this is all going to end. A lot of more pessimistic people who are in contact with me think, well, trade war first and global war second, nuclear war, how can we avoid it? I say by cooler heads, by Russia and China exerting a positive influence on Western Europe, England, and the United States, who seem hell-bent on provoking war. We don't want reform. We want war. It's very clear. We do not want financial reform. We want war. And it doesn't work. It's just not working. It's producing a lot of former U.S. allies, like Turkey, becoming enemies. I expect before long, Germany is going to be completely divided. Its security agency is going to be pro-U.S. Its entire economy and leadership in parliament is going to be pro-Russia. Very divided. Not West Germany versus East Germany. Not that kind of divided. The entire German state is going to be divided between support of Langley and support of their economy, which will have Russia as a friend and the United States not as a friend. Very exciting times, and I cover a great deal of lots and lots of these topics and themes every single month. Can't cover them all every month. I didn't cover the petroleum market, the oil market, much this month. But I have in the past, and I will in the future.
Excellent. Jim, thank you so much for a great interview. I know that the team at Rogue Money, and all of our listeners appreciate all your hard work for you and your team over at the Golden Jackass. So thank you so much.
Oh, it's a pleasure being on. I enjoy being on.
Excellent.
Always interesting.
Right.
Thanks
Absolutely.
a lot.
Take care. Thank you, everyone, for listening in, and enjoy your day. Take care.